I'm Akshat Malhotra. Welcome to the course on the fundamentals of personal finance. Well, if you've been watching all of these videos, by now you're all set with your savings, investments, the right money mindset, budgeting, financial planning, and even taxes. And now it's time to deep dive into mutual funds. Well, have fun watching these videos and don't forget to subscribe to the channel. I hope the last chapter helped you learn more about choosing a mutual fund. And in this chapter, we wanted to specifically cover an example of the last 20-25 years of one particular mutual fund and how it has performed over the years. So once again, I'll show you this Excel sheet. We've taken out the data of this particular mutual fund. So as you can see, we've taken up the historical data of this fund called HDFC Top 100. Once again, no affiliations with HDFC. It's important for me to say that every time because I don't know if you take out some meaning out of that. So you see here, a total amount of 10,000 rupees was invested in the year 1996 when the mutual fund scheme actually started. And within this was the initial NAV, 9.96. So as soon as I started my investments, it dropped down a bit to 9,950. I lost 50 rupees within the first few months. But then as I continued staying invested for a long period of time, for the next 1.5 to 3 years, I see the NAV had gone up from 9.91 to almost 23.62, 24 rupees, right? So which means my investment of 10,000 rupees had gone up to almost 24,000 rupees. Wow. And then for those of you who followed the markets at that time or know the news, there was a dot-com bubble in the year 2001, 2002. You could see this graph and all of a sudden the markets crashed. And my investment that had gone up to almost 23,000 rupees in the year 2003, the investments that had gone up to 23,000 rupees in the year 1999 started dropping to, as low as 11,000 rupees. On 28th of September 2001, it went down to 11,817 rupees. Let's say, I hope we did not take out our money, and if you see overall as compared to the initial when we started in 1996, my money is still up, although I've lost some money over the last in this crash, but from those 9,950 rupees, it's still gone up to almost 12,000 rupees. And let's say we continued staying invested in that, we continued over the years, and once again, it went up to 140, 160, 170, and the year 2007 it went up to 169 rupees. And then once again, you must remember there was a global financial crisis that happened in 2007, 2008, and once again the markets crashed. And so my investment that had gone up to 169 rupees, 170 rupees, my 10,000 become 1,70,000 rupees, started falling down and it came down to almost 92,000 rupees in the year 2009. But once again, let's say if I compare this to the initial amount of 10,000 rupees, my investments have grown up by 9 times in a period of about 12 years. And suppose I continued staying invested from 2009, further, the NAV, as you could see, is going up. It went up to 300, 200, 250, 300, 400, 460, wow, 500. It went up to 500 rupees, 530 rupees, and then 570 rupees, and it kept going up and up and up. And there you see once again in the year 2019, March of 2019, or rather let me take December 2019, it went up to 500, which means my 10,000 became 5 lakh rupees. But then COVID happened and all of a sudden markets did crash and I lost some money. But again, I continued staying invested and this 5 lakh rupees went up to almost 7 lakh rupees by 30th September 2021. Compounding playing its true colors, showing its true colors in the later years. And the point that I'm trying to make here is that although these ups and downs had happened in 2001 and 2002, 2007, 2008, but if you look at the graph now from 1996 till 2021, you don't see any of those ups and downs of 2001, 2002 or 2007, 2008. Yep, 2007, 2008 a little bit, but 2001, 2002 has started becoming showing up as a flat line. That's the power of long-term investments. That's the power of long-term investments. You continue staying invested, provided your fund manager is doing the right thing, and the compounding will happen. That's the example I wanted to show you. And I'm sure there must be one question that must be coming up in your minds, that Akshat, what if I was saving for a goal that was in February of 2020, just before COVID came in. I was saving for a goal of March of 2020, and all of a sudden I went up to 5 lakh rupees, but then I lost 1.5 lakh rupees. That's a pretty huge sum. Agreed? Completely agreed. But tell me one thing. When you were in the December of 2019 and let's say you had your goal for March of 2020, was that any longer a long-term goal or did that convert into a short-term goal? It converted into a short-term goal, right? It was no longer a long-term goal when you were sitting on the December of 2019. And so what you should have started doing is, as soon as the 10-year, 15-year, 20-year goal started becoming shorter, 2 years, 3 years, 1 year, you should have started doing the strategic asset allocation, rebalancing your portfolio. And you should have moved some of your amount from your equity into your debt, because it's no longer a long-term goal. You could have some portion parked, maybe 10%, 20%, 30% to just get that flavor of equity. But the remaining all should have been converted into fixed income schemes, should have been converted into debt schemes, because it's now a very, very short-term goal. 3 months goal from December of 2019 to March of 2020, right? So that's how you think about, that's how you look into investments. It's very important to be clear of your goals, very important to be clear of your risk appetite as well as time horizon. Love both of them, right? And that's it. You don't have to worry about anything. You see a live example here. Similarly, there are tons of examples you could see over the internet. And that will help you understand the essence or the importance of long-term investing. With that, we successfully complete the chapter and the module on mutual funds. I hope we were able to deliver on the promise of deep dive into mutual funds. I hope you now take an action on choosing the mutual funds with respect to each of the parameters that you've learned, and not just by Googling what are the top 5 mutual funds. I hope this was entertaining. I hope you learned something new today. See you in the next module. Bye. If you have any questions, please add them in the comments below and I will make sure we answer them. Do like, share and subscribe to this channel.